So I'll introduce you, Josh.
Sure.
Perfect. Well, welcome everyone. Thank you so much for coming. I have the pleasure of introducing our guest speaker today, Josh Tate. He is an attorney by trade who currently sits on the board of a cryptocurrency exchange and is the CEO and co-founder of ForumPay. Prior to venturing into cryptocurrency, Josh has an extensive knowledge in real estate and for over a decade was a partner at a real estate acquisition and development firm focused on world-class resorts in the Pan-Caribbean area. Josh joins us today to shed some of his professional insight and knowledge of the fusion of cryptocurrency and real estate. Thank you, Josh, for being with us.
Thank you very much. I'm that guy. That was a lovely introduction. So yeah, we're here to talk about crypto payments, specifically in real estate. The fun fact a little bit about ForumPay is that not only are we tech guys, but the two founders, myself and my business partner, are both old real estate guys. So myself from the development standpoint, and my partner built 6 multi-billion-dollar publicly traded companies in the mortgage space. So we're kind of tech guys who have a deep passion
But you get what we go through.
in lots of different types and kinds of real estate transactions, both on the finance and the other side of it. The ForumPay as a business started around, as a concept around 4 years ago. So really in terms of actually what we decided to do was we looked at what we thought was a major failure in crypto as a modicum of transaction, right? So rather than being something that was just a store of value, what do you actually do to keep things, to turn cryptocurrency into something that could be used in a transactional environment? Collateral benefit of actually using crypto in transaction is it tends to stabilize it, right? So if you actually stabilize the currency, the value also tends to increase over time. So in any currency, if you even look to foreign currencies and where they're stable and where they're not stable, the acceptability component of the factor of money, right? So if there's 6 characteristics of any money in the world, right? Being divisible, limited supply, acceptable, what are the 6 characteristics? I'm stumbling over. Anyway, the 6 characteristics of money. The final bit being acceptable is actually what stabilizes any particular currency. Using it actually every day for everyday purchases. If you look at unstable currencies, it's because they're not widely accepted. Cryptocurrency had that same problem basically over time, in that 1, it was highly volatile, 2, nobody actually accepted it for buying everyday goods and services or different things that you spend your money on. So we set out to actually fix the acceptability factor. The problem really on acceptability was that there wasn't instant price determination between any 2 parties to a transaction when you were dealing with crypto. So if we use Bitcoin as an example, you basically would have a situation where, yeah, I can send you Bitcoin. That technology's been around a long time. That's a peer-to-peer payment method. But if you and I agree that what you were selling me is worth a certain amount of Bitcoin, and I agree that I want to send you that amount of Bitcoin, the time it takes for me to send you that Bitcoin, that value would change. So one of us is not getting the benefit of the bargain that we entered into at that particular moment in time. The second factor would be then that you still have to convert that to fiat funds because most businesses still run on fiat money, right? Traditional currencies. So from there, you still also have a volatility factor. So the technology fix was to figure out how to actually create instant price determination, which we now commercially call instant conversion of crypto into fiat funds in any transactional environment. Real estate's one place where we do it, but we also do it in coffee shops and pizza shops and taco trucks, and we do it for yacht sales, and we do it for gaming companies and sports books and retail outlets and so on and so forth. Crypto can be used in a transactional environment with ForumPay just like any other money in the world. And both parties actually get the value of the transaction that they expect at the moment the transaction takes place. So that's really kind of from the inception what ForumPay was all about and what we set out to solve. Did so commercially, launched a little bit, or ForumPay launched really commercially a couple years ago. We started in about 6 months of beta, really proved out the model. We're now operating in almost every non-sanctioned country in the world. We do a significant amount of processing, but you guys don't care about anything but real estate, so I will move on. There's some interesting facts with crypto. One of the first hurdles that you get by is, do people really want to spend it? Well, yes, the statistics are all there and the patterns of behavior have increased significantly over time. In fact, I can tell you, once we kind of go through basic stats here, what the current market is, even with the downturn in cryptocurrency's value over time, and that in payments, it has stayed stable and strong, and actually our company continues to grow at around 67-72% month on month. So, one of ForumPay's principal bits is that we are wallet agnostic. So for the uninitiated with crypto, you can have an exchange account, but most people will also have a crypto wallet. Wallets can take lots of different types and shapes and kinds and forms, but we'll focus on a wallet that basically appears as a mobile application on your phone. It's where you can track and trade and hold on to your cryptocurrencies. It also functions as the tool which allows you to send crypto. And this environment functions as the tool to allow you to complete a purchase at a point of sale, at the closing table, or otherwise. There is no other company in the world in a payments environment that is wallet agnostic, meaning there's probably 150 different brands of wallets that different people have. There's many more exchanges out there that support those wallets, so on and so forth. We can accept payments from any and every wallet in the world that is live today. And we beta test and run tests on a daily, monthly, weekly, annual basis on every wallet out there to make sure that our system continues to perform with any wallet. What that's fancy way of saying is it's the total addressable market of crypto consumers that can pay if ForumPay is involved in the transaction, not a subset or a segment of that crypto buyer market. So if your buyer says, well, I have a Coinbase wallet or a Trust wallet or a MetaMask wallet, these are all names of wallets in crypto, the answer is yes, you can pay from your wallet, and they want to. That's important because they don't want to go download some new app or do something weird or trust something unfamiliar to them in a transactional environment, especially when we're talking about the kind of funds involved in real estate transaction. They like what they trust, they know what they trust, and if they can transact with that particular thing, then it makes the transactions that much more plausible, feasible, marketable for the consumer. Great stat that came out last year, or at the end of last year, 12% of first-time home buyers liquidated cryptocurrency to make the down payment on their first home. It's, last time I checked, around 300,000 people in the United States that cashed out their cryptocurrency to at least make the down payment on their first home. Shows you the demographic of consumers that you're talking about, right? First time.
Was there like an average age for that either?
In crypto, it's hard to kind of track ages, but generally speaking, you're talking about anything from the 20-year-old to 46-year-old market, which is your primary market.
Right.
When you get into the higher value sales, it creeps up very quickly into, largely. We sold a $17 million house with crypto. It was a stable coin to fiat transaction last week. So, and that was like a 70-year-old guy, believe it or not, with his crypto for that transaction. So it was pretty wild.
I don't really know much about crypto, so when you say a fiat, what is that?
I'm sorry, fiat is just the term for regular money. I should say dollars.
Okay. So, all right.
In finance, sometimes globally we say fiat because it just means dollars, euros, yen, pound sterling, or whatever. I may have glanced over that, I apologize.
It's okay.
So we'll say dollars from here on out. The travesty in the 12% bit here of the first time home buyers is that they actually cashed out their crypto rather than using it to pay. Now, would their title company have had ForumPay enabled, or their broker known, right, or their agent known, they wouldn't have had some very significant impacts on their net worth by actually cashing it out on an exchange, sending it, going through that expense, having a significant taxable event and a reportable event from the exchange, sending that over then to their bank, having to deal with whether those funds were seasoned for long enough, and so on and so forth. The stuff you guys deal with all the time. Imagine they just showed up with cash, right? And all the stuff they had to, not to mention all the stuff they had to get there to get to the cash, right? But they just showed up with cash, so it causes problems. It wasn't an efficient way. Still, lots and lots and lots of people last year did that. The third data point we really use is sort of a marketing pitch that crypto people are very tribal. If they know that there's a place or a resource or a company or a merchant or a store or a gaming company that will accept crypto or will embrace the way that they want to pay and the way they want to use their crypto, they will go. So most of our merchants or title companies or whatever that become ForumPay clients will tell you that 40% of the people that pay with them are brand new to their company. So it's a big draw, right? So if you guys are working, it's a whole segment of people that you guys can attract as a buyer that have a very specific way they want to pay, that we can facilitate them doing so, that has no impact on the transaction at all. I mean, functionally, right, or practically. This is some other, challenges in the past. I already kind of addressed this. Instant price determination was a problem. Volatility was a problem. Nobody wants to take the risk. I should say most of the sellers out there don't want to take the risk. We de-risk it, we mitigate all of the risk, we eliminate entirely the risk to the seller. Consumer gets to pay in whatever they want to pay in. The buyer gets to pay in whatever it is they're holding in cryptocurrencies. We're wallet agnostic, so we've already addressed kind of the fact that we can deal with whatever tools the buyer has and feels comfortable with already. And we actually, unlike any other payments firm in the world, will provide the tools and the resources to you, which are more listed in this thing, that are familiar from validating a buyer, but in a crypto environment.
Question.
Mm-hmm.
When you're validating that buyer, so how do you present that in an offer to the seller, with whether it's a person using crypto for their down payment or full purchase? Because there's the options.
You're right. So exactly the same thing happens in terms of how, if it's a hotel that we have or anything else, the purchase price is still in dollars. The seller wants dollars. The transaction is taking place in dollars.
Mm-hmm.
Everything is the same when it comes to the offer and all of this. Some people have chosen to put in a disclosure, and some states are starting to put in a disclosure that says that the buyer may be interested in paying with the the buyer may be interested in paying with the cryptocurrency. But from all perspectives, sitting at the closing table, the only thing that's involved is dollars.
Okay, so if they're gonna purchase the entire property in full with crypto, that right now legally doesn't have to be disclosed to the seller, or?
It does not, because
Okay.
the seller, the title company, more importantly, only ever receives dollars.
Okay, so we just mark the box cash. if that's the
It's
case.
effectively a cash offer, or a cash buy.
Okay.
And the same is true with the down payment. So we do it with both.
Quick question on that. How do you overcome the volatility on a 45-day transaction, let's say, especially the current market when crypto is all over the place?
So we wouldn't cash it out until the close. We wouldn't actually make the conversion until the closing table.
But who's at risk on that? Let's just say you bought a house 30 days ago for $500,000 using and Bitcoin is what you plan to use. Your $500,000 worth of Bitcoin is now worth $400,000. Who is assuming that risk on that?
So you're talking about
Buyer?
the ability of the buyer to actually be
Yes.
able to afford the home.
Yeah.
So in a
I
lot
guess
of,
yes, in a simple, yeah.
if all they had was Bitcoin, your closing would be in trouble.
Yeah.
Right? So assume that their net worth is not exclusively in that crypto and that it hasn't dropped a certain, rate that would disqualify them from the purchase.
So from a realtor's viewpoint, you would want to qualify the people really well outside of purely Bitcoin?
Yes.
Or their
So-
buying ability of
Yeah.
Bitcoin?
So we would help you, one of the tools we have is to validate the wallet, right? First of all, you have to validate the wallet, and then you have to validate the cryptocurrencies that are held in that wallet. We can even go all the way back, like banks do on seasoned funds and everything else. We can give you all those tools. If you wanna qualify the buyer properly, then you'd wanna look at their net worth. If it's a $500,000 house, and the only thing they're disclosing is that they have $500,000 worth of Bitcoin at that instant moment in time, it's probably a difficult buyer to qualify. Now, if they have $1 million, you can kinda take what you want, right?
Maybe a hard sell to the seller too, to accept that with that kind of
Could be,
volatility.
but if they have other funds and other net worth, they're just choosing to pay in the crypto at the point at closing, then that's where we would step in.
And one more thing regarding Bitcoin. If you have an overseas buyer, you have to have the seasoning You have the seasoning rules for if you get into US dollars. Do you have that same issue? Let's say somebody's giving you Bitcoin and they're moving into a US based account.
Mhm.
Are you considered US based account?
We would be considered a US-based account when it comes to converting the crypto to the fiat, but we're doing it at the day of closing, so it's not seasoned funds, right? We can and have seen instances where seasoned funds can be validated, and we can give you the tools to validate them in crypto. It kind of depends on whose requirement it is. If it's a mortgage company requirement, some still won't do it, some will. If it's a different regulatory environment just for overseas buyers, well, then we can also provide the tools that show that those funds are in fact seasoned and the source of those funds in crypto. If they still won't let you do it based on the regulation from that perspective, then it's.
I had something recently where a buyer from Spain moved money from Banco Santander, I think, to Bank of America here. But it was considered seasoned because it came from a bank to a bank.
Yeah, in crypto, we can validate the same seasoning of funds, unless it's a mortgage company that still doesn't like that. So if it's a finance deal and you have a mortgage company that won't, take crypto as actual source of wealth or seasoned funds, then, you got problems. But they've got those. I mean, Maggie can tell you I had the same issue when I bought my house in Atlanta. I was living in Malta. I bought it sight unseen from halfway across the world. I had to move a lot of money back into the US.
It's a nice house too, by the way, I was in that house.
I thought I recognized you. I think I saw you maybe in one of the videos.
You might have, your mom and dad were there, I think.
Yeah, that was probably it. You might have been in multiple houses if we looked at that neighborhood. But yet, moving money,
I was there, actually.
moving the money internationally, no matter whether it's fiat, dollars, yen, pesos, euros, sterling, pound, whatever it is, different places have different regulations for it. We can give you the tools, if it's acceptable to the bank or somebody else, to be able to validate, interestingly, the source of wealth as it relates to crypto, the seasoned account as it relates to crypto. The most important thing in crypto is that we can validate that the wallet is a real wallet, that it's never been sanctioned or associated with anything in the dark web or any of those kind of old weird things. We can do that multiple times during, in the beginning, midway through, at the closing table, and actually validating the cryptocurrencies. There's ways that people will try and double spend crypto, for example. If you confirm that the transaction has been, submitted on the blockchain before too many things and blah, 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 blah. There's risks that you can have there. So we can actually validate that the Bitcoins have never been associated with money laundering or nefarious activity. I mean, it's the most trackable currency for being an anonymous currency in the world when it comes to actually, AML and anti-terrorism and money laundering kinds of regulations. So we're very sophisticated when it comes to those things. It's a big topic in crypto.
So do you work along with the title offices when it comes to the closing table?
Mhm.
Okay.
And we actually we actually have account reps who will be live and online with everybody at the closing table to make sure it goes smoothly. So we ask for, I think the literature you'll see 8 days. We ask for 8 days notice to close a transaction. You guys usually have many, many more days than that, but we can close a transaction. We've closed transactions with only 3-day notice, but that depends on how much validation of the buyer you want us to
Well, the
perform.
clear flow has to come at least 3 days prior to, so you could just widen that gap if you know you're using it, make it 8 days.
So if you have a buyer and as soon as you have a buyer that expresses interest in using crypto, just let us know and we'll be prepared. But at a minimum, yeah, I mean, 3 days.
You can always adjust the
is
dates,
pretty
that's
tough.
pretty,
Yeah.
that's relatively easy, I should say.
But the payment happens at the closing table.
Yeah. And you mentioned earlier, people were cashing out their crypto versus using something like your ForumPay.
Mhm.
So what's the significance in cashing one of those accounts out versus keeping it open, and if they dwindle it down to zero? Like why?
So if you cash out crypto, well, one, it's expensive, and two, which we can get into in more detail if you'd like. First is it's expensive. To go to coin, the exchanges do not want you to move the money out of them, right? But the way the blockchain works, moving Bitcoin in a payments environment using ForumPay technology as the payment source is very simple. There's nothing they can do about it. But if you have a Coinbase account or something like that, cashing out that crypto into fiat they're into dollars. So cashing your Bitcoin out and converting it to dollars comes with a fee. Moving it out of the dollars out of the crypto exchange, for example, then to your bank comes at a fee. And then moving your bank money comes to someone else, to the title company's escrow account, also comes at a fee. So it's expensive and it's time consuming, and it's still not eliminating the risk. The other impact is that you're actually cashing out an asset, according to, in the US, the IRS, which means your exchange is calling that a reportable event, and they're gonna send all that information to the IRS. I don't know what your tax liability is as an individual, I don't really care, but I know you have one, and they report it.
Okay.
When you send Bitcoin, so in a transaction, a ForumPay transaction, I'll show you a live transaction in a minute. You're sitting at the closing table, basically, and there's payment instructions that are generated by the title company or the escrow agent, whatever it is, depending on what part of the world it is. So they show you the payment instructions, you open your wallet, you scan the QR code, you transmit it. What's happening is that Bitcoin is being sent at whatever value that we quoted at that instant moment in time over to here, and being guaranteed that that amount of fiat funds, dollars, will be converted at that rate at that instant moment in time. So the Bitcoin goes out at a value, it's received at a value, it's cashed at that exact value. So there's no reportable event in the transaction. I do not and am not opining as to whether someone had any appreciable or depreciable value in an asset that they held. That's their responsibility. What I can tell you is that they didn't cash it out for fiat or for dollars, and therefore there is no reportable tax event in the process of sending the crypto. So a lot of what people are doing with crypto currently is diversifying assets. So buying real estate or using it to, make investments in other things. We have hedge funds and things like that that use our service for the transmission and the conversion of the crypto for that very reason as well. So that's another distinct benefit for people who've accumulated a significant amount of wealth, and crypto people aren't generally the kind of folks that really like to sit around and do a lot of paperwork. It's more of a libertarian mentality, if you will.
Do you think with Uncle Sam starting to look a lot closer at crypto, that might be a little problematic? If I turn $10,000 into 500,000 and I run it through you to buy a property?
It doesn't impact, it doesn't impact this transaction because there's no technical visibility into it.
But I'm still
Whether or
cashing
not-
out an asset that's appreciated to buy the property.
Which it means your tax liability and what you report is still your business. We've not opined whether or not you've done it, but the way you've used it in this transaction, it doesn't say it's not a taxable event, it says it's not a reportable event. I can't look back into what they bought the crypto at, right? I have no idea if they bought it in 2007 at $4, or I know the value that they're sending me in an asset at that moment that's being converted into dollars at that particular moment. There's no way to impart a reportable event into that, other than that person may or may not have a tax liability
So,
based on the appreciable
Somewhere
value.
down the road, it's gonna be the currency that, remember when we used to be able to get an anonymous currency and now it's all regulated? Yeah, so
Because
it'll
we-
probably be
we-
coming.
We
yeah.
have regulations and licenses requirements that change every single day.
What is the cost of ForumPay?
I'm sorry?
What is the cost for ForumPay?
What's our transactional cost?
Transaction.
So what do we charge? Transactional costs are different, it depends on the time of the day, but generally in real estate, so in our kind of credit card processing like business, we charge like the credit card charges, so within the same range of rates. Right. On real estate transaction or higher value transactions, there's no cost to the person receiving the funds because they're not used to that particular model, they don't accept credit cards either.
Right.
It's typically, depending on the cryptocurrency, it's typically sub 1%, and it's levied onto the consumer, the buyer, if you will, as a charge to the buyer for the convenience surcharge, whatever it is. This is just stuff you guys can look at, more marketing stuff, and I'm not very marketing. These are just some things that we use in order to, like, security and compliance. Chain analysis is something I told you about. That's something that's very important no matter what type of crypto transaction you're involved in. Make sure that somebody's doing wallet and crypto verifications at every moment, because that's the way you avoid any of the things that usually make the headlines. right? The big scammy kinds of things, and we're very, very good at that. We also work with some of the world's largest payments processors and remittance companies, so, you know, real estate is a really cool book of business for us, but our business is typically at a much higher regulated value on a global basis because we're running, you know, hundreds of millions of dollars worth of stuff through every day. And we're doing it for big public companies with big public shareholders and all that kind of stuff. So, more marketing stuff. That's probably the last slide, isn't it? Yeah. Okay. So I'll show you just really quick, if you wanna plug me in for a moment. So our clients, so the way we're regulated, not that you guys really care, but just it explains a little bit. We have to know